Thank you for the invite. Yes, it has been some busy 12 days. I think we are in day 12 on this terrible war in the Middle East. I think it's actually important that we sometimes, when we talk about this is actually real people being killed every day. It's not for fun. Remember, it was Saturday morning. Israel and then US joined the bombings. Most of the Sunday, I sat in meetings because we had to find out our positions, but there was also actually a physical issue in this because Global Risk Management is a company that do derivatives or paper in all kinds of energy, crude oil, all kind of oil products, gas, power, emission, biogas, biofuels, and so on. And we also have a small team here in Aarhus in the very short end of the power, and we do some short end gas trading out of Copenhagen. But we're also part of a bigger group called Bunker Holding, or USTC, United Shipping and Trading Company. And Bunker Holding is the biggest supplier of bunker fuel. Bunker fuel is the fuel for ships in the world, and I think the group has around 80 people in Dubai. They were actually sent home to work from home, those who could work from home. And it is pretty chaotic what is going on. Could you imagine that you have a ship over here that should bunker, should provide them with fuel, but the problem is that the barge that should provide the bunker is on the other side of the strait. Or you have one here going into that port, but the port is shutting down because it's being bombed. It's not every day they are in this situation. This is extremely chaotic, and there are issues with sort of what you call availability. I think also Maersk was out saying today that they have an issue with availability, that is getting actually access to the fuel. In Singapore, for example, it's a huge hub for bunkering because you have the ships and you go to Rotterdam, for example, and you fill them up in Singapore. But a lot of the bunker fuel in Singapore comes from the Persian Gulf. Some come from China. China just cut off all export of what you call refined products, or could be other gas oil, diesel, jet fuel. We're not completely aware of whether the so-called bunker fuel is included as well. But it's a very chaotic part. But we are there. We have clients, GRM, in Scandinavia and most of Europe, Middle East, Asia. We're regulated by the Danish FSA, which means it's almost impossible to work in the US. So, but we're represented there, GRM, together with our sister companies. We are in Singapore, Sweden, Norway. We're opening up in Germany this spring. But enough about that. Let's talk a bit about the market. I will talk about gas and then fill it into EUAs. Time is quickly running. If we look at the gas market, people tend to say, it's nothing, because prices were 232 euros per megawatt hour in 2022, so 60 euros is nothing. But you can go and ask a German energy-intensive producer if 60 euros or 50 euros for gas is an issue. It's a big issue. On top of that comes EUA cost, of course, regulation. If you go to the US, gas prices have hardly risen. There's no regulation. There's a huge competitive issue with it. But yes, we are not near the price in 2022. We actually, here's the pointer, right? We're actually close to the peak in January and also in 2023 when we had this Hamas attack. I didn't put on the 2022 because then you couldn't see the spike basically right now. I think we're trading at 51 for the front contract in TTF as we speak. Huge volatility in gas. I will come back to that, but also of course in oil and so on. So I know most of you are in power. You're used to volatility, but it's also pretty tough in in gas and the oil products at the moment. But what is the latest development? I think most of you follow the news, of course. This is taking out, these AIS system where you can take out where ships are. One of the big issues for our people down there is that there's a lot of spoofing going on. Spoofing is when you interfere with the AIS signal, so you cannot trust where the ships are. They had ships that they could see were moving at 100 knot, I think it's called. That is not possible for a LNG ship or a tanker to do that. It's impossible, and it actually creates even more uncertainty, and it's absolutely crazy in these areas. This is LNG ships I took out, but if you take out all vessels, tankers, and so on, they are anchored here, and they anchored to get out, and they anchored over here to get in. And here you have the Strait of Hormuz, right? Bandar Abbas there, Dubai. So most of you know Fujairah, where a lot of the oil comes out. I was in Fujairah 3 months ago. This huge alley with the tanks right full of oil. It's a bit strange when a colleague sent me a video of a drone coming in, hitting these tanks. This is the real deal. I took a few headlines. Market bets that Trump will end the war. The taco. You'll chicken out because this is very unpopular in the US. I think that's basically a bit of concern because the market seems to believe this will end very soon. I don't know, but there is certainly a risk that this will just continue to drag on. And maybe Trump says tonight or tomorrow, in a week, 2 weeks, the war is over, big victory, we killed them, we obliterated the nuclear facilities for the second time. Remember, they already said that June last year that all the atomic things were gone. Now they have done it again. Now it's gone again. And maybe he comes out saying that it will end. But we don't know if Iran thinks the same way. Maybe Iran says, hey, that's good. But as long as you're in the Middle East, as long as you have bases in Riyadh, Doha, Bahrain, Qatar, where are all the American bases in Iraq, then the war is not over. You have to get out of the Middle East. So it doesn't necessarily end, even though Trump's come out and saying now it's victory, we take our people home. Because this is extremely unpopular in the US. This is higher gasoline prices is extremely unpopular in the US. War, Trump was elected not to go to war. And this could also hurt the economy because it's not so much the level of the oil price. $90 is not a historical high oil price at all, but it's the change, it's the rapid change in the price that is uncertainty. How important is the Strait of Hormuz for the LNG market? Is roughly 20% of global LNG. Yesterday, roughly 20% of global LNG. Most of the LNG from that area actually goes to Asia, but it doesn't matter because LNG is a global market. So where the LNG doesn't matter, and LNG sets the price of TTF or the European gas prices. It's basically the most expensive megawatt hour in the system. It's basically the same as in the power system, right? And that is LNG, and that sets the price for European gas. So 20% is cut off. The Rasmussen, this Rasmussen LNG facility is not working from Qatar, the biggest one in the Middle East. Maybe it takes time before it's up and running and so on again. So even if there's a peace tomorrow, it takes time before things getting out. You need to have the bunkering or the loading of the LNG and so on. This is a huge issue for the sort of the whole supply system. So prices are, this morning, I just checked before I went to the States, 51 euros per megawatt hour for TTF. I think we were down in the mid-20s when we bottomed out earlier this year. And the issue, especially for the gas market, is of course that this comes at a very unfortunate time. It didn't come during the winter where we have the issue with low inventories, but it comes in a situation where inventories are pretty low. Germany or EU average is 30%, just above the 2022 level for the EU. But if you look at the four main hubs in Northern Europe, which also set the price in Denmark, Holland, Belgium, France, Germany, we are around 100 terawatt hours of inventories, and we are below the 2022 level. There's basically no inventories left. In Holland, you have very low. Reden, for example, in Germany is basically empty. It also comes in a situation where Asia is bidding up prices significantly. So the JKM LNG price in Asia is actually at the moment higher than in Europe, and there's high transport cost. So what I'm actually showing here is what you call the so-called netback from the US. So you look from the US, I have an LNG, I produce LNG. They earn a lot of money today, I can tell you. And where should we ship it? Asia or Europe? Yesterday there was 4 euros, $4, per million British thermal unit of shipping gas to Europe. And when the price in TTF is 12 British thermal unit, that's a huge profit. And when you get $4 to ship it to Asia, of course you ship it to Asia, not to Europe. There's 9 LNG ships I saw yesterday that have actually turned around, going to Asia instead of going to Europe. It also comes in a time where we start to see the first phase out of Russian gas. Short-term contracts will be, you cannot do that with Russia from June on. Remember, there's still Russian gas coming to Europe. Roughly 12-13% of the gas coming to Europe is from Russia. 5-6% of the import is through the Turk Stream. The rest is LNG. Putin, of course, knows this. That's why he was out saying that we maybe send the LNG to someone who appreciates our services better than the Europe does. Of course, he's trying to make this worse. So it also comes in a situation where we are phasing out Russian gas, which I'm happy about, but it creates uncertainty in the gas market, and the volatility has been extreme. And I just want to show you about the volatility in gas and oil. We start with oil. This is a chart where I take the highest price of Brent oil minus the lowest price. So the interval during the day. On Monday, we had $35 for Brent between the highest and the lowest price. I have data down to the late 80s. We have never seen anything like that before. I can tell you my colleagues in Singapore that covered the night shift, they were pretty stressful during the night. And actually, if you look at what we are more active in what you call the products, gas oil, diesel, bunker fuel, and so on, the price swings were actually bigger than this. So oil prices were around $100, opened up at 120, I think, and then they dropped to 85 at the lowest point during the day. If you look at gas, the biggest price swing was of roughly 20 euros in one day. It's nothing compared to what we saw during the 2022. But again, we have to be a bit careful taking this 2022 because that was exceptional. What is happening right now is actually seriously enough. Something else that I think is quite interesting is that we are seeing another kind of reaction in the gas market compared to what we are seeing, for example, in the oil market. Oil is roughly also 20% cut off from the Strait of Hormuz. This may be a bit difficult to see, but it's actually the long-term contracts. So let's start with the prices for 2028. They have barely moved, which is fair enough, way out in the future. Prices in 2027, they are up some 10 euros. So there's some long-term impact. The dark one, the red one, is the spot or the front contract, around 50 euros. Also, so most reaction in the spot is always the place where you have these things. But look at something quite interesting. If you take the last 6 months of the year or the second half part of the year, we have seen a significant move higher also there. Not something we saw in January, where the spot price also rose. The second half of the year were more or less stable. What is going on here? Why is it that but prices in 6 and 9 months are moving more or less in tandem? Because it feeds back to the refilling risk in Europe. Because we know if we have to pay up for prices today, if we have an issue today, we'll have that issue throughout the summer going into the autumn, because we have to refill the inventories. And we often see when the spot is spiking, we have this so-called summer-winter spread works against you. Normally you can buy gas during the summer cheap and sell it forward in the winter at a higher price, and that covers your inventory cost. But at the moment, the summer prices are higher than the winter prices. So there's no incentive to buy for inventories, because you're buying something up here and you have to sell it down here. Not a very good trade. I know you are looking at that kind of stuff, you people in here. So there's a lot of issues here, but we're not at 2022 issues, of course. Just how much time have we left before I got carried away? That's 5 minutes, right? 5 minutes. Let's say a few words about the EUA price. This is the EUA price, the spot, euro per metric ton. Remember, if you buy 1 metric ton of LNG, for example, you have to buy 3 ton of metric EUAs. If you buy 1 metric ton of diesel, you have to buy or gas oil, you have to roughly buy 3.2 metric ton of CO₂, EUAs. Back in 20, before the war started, we had prices moving from 20, 30 euros to around almost 100 euros. Then we have a lot of volatility. Then in 2023, prices came off. There was a lot of renewables in the system, and maybe a lot of people thought that this high gas prices would continue. Prices came off, and then they started to trend higher. And especially the last 6 months of last year, prices went from 70 to around $90, and then suddenly they came up. And before the war started, they came up 20 euros per metric ton. Here, I think there was a lot of speculative money in the. It's very easy to be having a speculative position in the EUA market. I have a background from banking, and this is basically like buying a bond, obligation. So it's very easy, and there's a very liquid forward market. So they went in. Why did they went in? And why did it come off? They went in, the speculators, they went in because last year it became clear that we could have a potentially extremely tight market this year for EUAs. There's simply too few EUAs in the market this year compared to demand. What is going on? We have a linear reduction factor every year. We cut down the number of EUAs in the market, but we also have a lot of things. There's something called Repower EU, a system set up in 2020 or after the Ukraine war to support the green transition. How did you fund that? Oh, you said, we're just going to borrow some of the EUAs from 26, 27, and we sell them today. But the problem of this is, of course, that eventually the future is here, and that is now. So we now lack these EUAs in the market. Shipping came in, and we put in a lot of EUAs, but they are now being absorbed. Airlines no longer receive what you call free allowances. Bottom line is that both a lot of emitters, also those who actually have to surrender those, and speculators saw this coming. So they were buying up like crazy last half year. And suddenly it became clear for politicians that maybe EUAs at 90 euros in a situation where you have a weak dollar tariffs from Trump and so on is not a good idea. And we have seen a lot of political interference in this market. And that was the main reason why we went from 90 to 70, because suddenly we had Macron, we had Merz in Germany saying that we have to do something about this system. It's too tough on companies that they have to pay these EUAs or buy these EUAs, or they don't get free allowances because our competitors don't have a system like this. No system in Asia, absolutely no system in the US, maybe a bit in California, but the prices are much lower. So if you are going to ask a lot of analyst consensus, they all tend to say that prices will go up. I actually share that view that prices will start to go up, and they have been remarkably stable during this war crisis. Remember, for those of you who like to look at forward curves, saying that can tell you what the market is going, it doesn't work in EUAs. It's a reflection of the interest rate, nothing else. Where is the link between gas, power, and EUAs, EU allowances? They've been highly, highly correlated. And a lot of you, if you haven't looked at this recently, but we used to be that when gas prices goes up, EUA prices goes up, and vice versa. Because gas prices go up, you switch to coal, you have to buy more emission, and vice versa. Very simple. Probably also a reflection. Sorry if there's some EUA traders in here, but there's not that much to trade on. So if you see gas prices go up, you buy. If they go down, you sell. But that broke down in the second half of the year. EUA prices just continued to go up. Gas prices went down. I think it's a reflection of gas is less and less important in the European power mix, but also that people are buying into this tightness in the market. But where is the link to the power market then? Because what we have over here is actually German baseload 1 month, basically the same as the Danish price, right? And the EUA price. So German baseload, the EUA price, almost very, very nice fit. Also in this period where gas didn't fit. What is the lesson here? It actually seems that EUA prices had become the decisive factor in the merit order. It's no longer gas, it is actually the EUA price. That is why Meloni was out saying that we have to refund power producers the EUA costs, because then we can bring down the power prices, because then it will be cheaper to produce power. If the price is 70 euros, 1 megawatt hour of gas use triggers 14 euros. So if the gas price is 30 euros, now it's 60, but let's assume it moves back to 30, actually half of that is EUA cost. So there's a big change in the system here, if this is correct. Maybe it's just a coincidence. Coincidence. But if it is that EUA prices have increasingly become the price-setting factor in the power market has suddenly become very sensitive political interference, which also Louisa talked about earlier today, because it's the EUA price that politicians can do something about, because this is a political system. You can just dump more EUAs into the market. You can borrow something from the future, dump them today. You can scale back this linear reduction factor. Is it going to happen this year? No, because the EU system is so slow-moving. It's very difficult to change anything very short-term. This is not the US. But of course, this discussion will come. It will especially come to the autumn, where there is where the whole EU ETS system is up for revision by the EU Commission. There will be a lot of pressure on this. And to be frank, this is also an issue. German industrial sector is already under pressure. Over the last 3.5 years, 10% of German industrial sector has been wiped out. But if you look at the energy-intensive production in Germany, chemical industry, steel, fertilizers, and so on, we're talking about 23%. So it actually has an impact in the wrong way. Yes, emission is down, but it's due to production is down. I think there'll be a lot of pressure on this, because if prices go to 100, 120 or whatever, I think you will also see actually parties like AfD in Germany will win a lot, because it will be something say, okay, we have to do something about it. We're losing our jobs on this. Let's see where it brings us. That was actually what I had prepared for today.
Very good, Arne. Thank you very much.
And I stick to the time this year.
Any questions to Arne Rasmussen on these commodity prices? Yes, Gert Molsa.
If the war drags on, say that the Strait of Hormuz is closed until September, what kind of oil and gas prices will we see then?
We're going to see higher prices, that's for sure, because the market, as I said, is saying all the time, oh, it will take a few weeks and so on. If we say we go on for 3, 4, 5 months, we don't have any more strategic reserves left. They will be released. We will be lacking significantly of crude oil, but we will also, more importantly, be lacking products, refined products like especially diesel and jet fuel. Diesel, since the war started, diesel prices is up 50%, oil 30%, 45%, I checked it last night, so it's 10% higher today or something like that. Yesterday oil was up 25%, diesel was up 50%, jet fuel was up 80% since Friday before the war started. And it's even more, of course, if you take it from the start of the year. You could end up in a situation, it's a bit like what happened with gas in 2022, that you have to reach a level where you have this wonderful expression, demand destruction. Demand destruction is actually where people react to higher prices. And it's a bit the same like gas. It's what you call, I'm an economist by education, it's what you call an inelastic good, or the price elasticity is low. What does that mean in human words? If you're not an economist or as an engineer, it means that you need to have a big price change before consumers react. And it's very easy to understand. You have to fill up your car if you have to go to work. You don't cancel your holiday and so on. And you only tell your kids to remember to turn off the light if the price of power is very high. So it's inelastic. That's the issue. Companies, of course, it's typically something you use in the production, but you don't stop your production before you're at a very high level. And if you are at that level where you need to see demand destruction, we are talking about $130, maybe $150 for oil.
We have one question from the floor as well.
Yeah, thank you very much. Actually, the elasticity was a good point. I wanted to ask you a question for, so that's fine. There's one elephant in the room we didn't mention it in, which is China.
Yeah.
What's your view at the moment where China starts to have issues in sourcing rather than just paying a higher price for the supply? Do you see them entering in a war game? Do you see an intervention? And I have a second question is, globally, since LNG is, as you mentioned, a global market, do you see some alternative routes that would be created if that becomes a long-term situation? Like production coming from the other side of the Atlantic or moving directly through the Pacific, things like that?
I think basically there are 3 hubs for LNG production, right? The US, the Houston, Qatar, which are locked in, and then you have Australia. It doesn't really make sense to ship from Australia to Europe. Then we really have to bid up the price. What we could help us, hopefully, is that US LNG is really getting a big leap forward. But there's no alternatives. You can actually get some oil out of the Middle East. There are some pipelines to the Red Sea. The UAE can circumvent some oil going from this side and going to the Oman side on the other side of the strait in this Fujairah. But in LNG, there's no shortcut. You cannot transport the gas. There's no gas pipelines where you can. There's some LPG can they actually transport. LPG, of course, played a role in 2022, but then you probably also need to have quite a high price. That LPG is also higher. China is somehow the big elephant in the room. 3 days ago, China announced that they will stop exporting what you call products, diesel, jet fuel, gas oil, and so on. A bit uncertain for us whether bunker fuel is also included. That will be a nightmare in Singapore, I can tell you. What we're seeing is that countries are getting closer to themselves. They are themselves nearest. China is, of course, a special factor here. China is, first of all, buying a lot of the Iranian oil, which is basically still flowing. Last year, there was actually, and also the beginning of the year, there was an oversupply of oil. China bought a lot of that because they bought all the Iranian oil, some Russian oil, oil from Venezuela before they took out Maduro. Where is China in all this? I'm not sure. They are allied with Iran. They're relatively quiet. I have a friend, a geopolitical expert, so it's not my own words. He says his biggest fear is that the US is now using all their ammunition. They get fed up with war back home. He has a midterm election to win. So China has an excellent opportunity to go to war. Taiwan. Happy note, right? But I don't know. It's not my. I don't have a view on that. But I think that's the biggest fear in sort of geopolitics at the moment.
Maybe if the gas market now, if the market signals do not incentivize storage, do you think there will be like a forced purchases from countries like Germany that the authorities step in and say you have to buy this and this percentage? But that could of course have a price impact.
Yeah. I'm not sure the sort of the what's it called in English? Erfaring. The experience with this is very good, because the problem is if the market knows that there is a buyer in town that will buy at any price, what do you think will happen with the price? That's a big problem with these forced buying, these that you have to have 90% or whatever targets. You force the hands of the buyers. So I'm not sure they're going down that road. And the only thing will happen, of course, is that Europe will have to bid up the price, like not to 270 euros, but you will have to bid up the price. That's the big issue here, is that you're bidding up the price against Asia. But for now, I think they're hoping that the war will not last too long. But I've used this picture, and it goes for gas, it goes for the oil products, is that the war at the moment is like a snowball. It rolls down the hill, right? What happens with a snowball? You are Norwegian, so you know that. The snowball rolls down the hill. It rolls faster and faster, and it grows bigger and bigger. That's the key issue of the closing of the Strait of Hormuz, is that every day that passes, the problem gets bigger, because it takes longer time to go back to normal. Inventories will be more depleted, and so on. So this, and the only thing is that can sort of stop the snowball from rolling at the moment is that we get an opening of the Strait of Hormuz, and I don't think I just saw on my telephone that the Americans say that this military convoy they talked about was maybe end of March. The problem is that they had no plan when they started it. They haven't even planned a military convoy for this. They actually used that. I don't know if you know, in the 80s, there was a tanker war during the Iranian-Iraqi war, and there was a convoy there to support, but there was no planning this time. Sorry, was that the question?
Yeah, I think we have so much to think about on the situation that we are in, given the crisis in the Middle East. And thank you very much, Arne, for your contribution here today and your insights, and to understand what is happening there. And yeah, all the best with your work on trying to analyze all this.
Thank you.
So thank you very much for your contribution today.
Thank you.